Stavros Tousios from M4Markets, and today we're going to revisit the S&P and also have a quick look on what is happening with euro against the pound. It was early in the week, if not mistaken, when we did talk about the S&P reaching a critical level over here. Not only was that the upper channel resistance, of course, but also it was the golden pocket, 61.8 of the downside leg, and exactly at 40.30. Okay, we've also left a channel over here, and we did talk about that channel. We did say that we are probably going to see initially a rejection at this level, and then prices should repel lower down. Now, we have returned into the base channel, which means that we're not accelerating to the upside any longer. We're just still, however, in somewhat of an upside trend. It is important to mention that apart from seeing this, price coming out to the median line of this base channel, really highlighting how useful a tool that is, this is also at the same time the previous swing high of the first leg to the upside, and this is around the 3900s. This is now, guys, a confluence, okay? And there is two things that can happen from here, or maybe even three, or we can even say four. But mainly, I'm looking at this as a level where we can see some respite to the upside for a potential correction indeed. And for now, because supposedly the low is in the short term, the assumption is that if we start moving higher indeed, it's not that much likely that we're going to break back outside the base channel. Okay, let's not forget the base channel can extend to here. And that might be where the 50% comes and provides that resistance. On the other hand, if we lose 39.02, we have the potential for 38.92. But the main issue is that we have now tapped that high. Only if we actually go below that level and tapping into this zone, then that would make things a little bit more bearish. If we go up without tapping into that territory and, there is a break outside this channel, then we'll be looking for this upside leg to continue, perhaps up to the 4K once again. Now, I'm not sure when it was the last time we looked at euro against the pound. Looking at the little bit more of a longer term from like last March or so, we have drawn a base channel with a very volatile spike to the upside and its return back within, of course. We have not yet managed to go back to the lower channel, but we have made an attempt, of course, to reach above. But the thing is that we haven't really, since we fell in the first attempt, we haven't really made a significant move towards the bottom, apart from the recent decline over here. However, and as you can see again, the median line of this channel comes into the spotlight. And this is also the 50 Fibonacci retracement of the last leg to the upside, around the 87.20, 87 territory, a very strong support if you ask. However, now we see, actually, I would say from here to here and from here to here, we have an actual hidden bullish divergence instead. Okay, now, there is two things to take into account. We've had 1, 2, 3, 4, and 5 legs up, which is the ones we follow usually. And that means that it's probably going to be a correction that is going to end much deeper, and then we'll continue higher. Or the other case I'm looking as well is for a potential of a pattern that is called flat. And that would be the case where, we are going straight up from here. And for example, that would suggest that this is 1, 2, and 3, 4, and 5. We have 5 waves here, and these are two corrections with an irregular move to the upside towards the 89. And this is a 5-wave move that ended down here. Okay. So for now, if we look at this, it looks like 1, 2, 3, 4, and 5. Potentially, we might be done, and we start moving to the upside. So we have to pay attention, since we also have a bullish hidden divergence signal, right? We'll have to pay attention to 87.37 and then 88, 81, 8800 or so, which is a cluster. The break of the 61.8, of course, is going to make things a little bit more biased to the upside. But as long as we remain below the 50, bias is still to the downside. But what I'm saying is that once we break that 50, and since we have two signals also on the 1 hour over here, you can see it on the RSI, I favor a bit more upside.